about, let's see, yeah, three things. First of all, just a very brief kind of reprise around the challenge in funding renewables, not just here, but across Europe. Then look at some of the project finance trends that we're seeing, again, not, but primarily from a UK perspective, but I think for comments apply just as well in the whole of Europe and equally well will apply here. And then very briefly to finish, looking at funding of green technology. I'm not pretending to be an expert in that area, and I've just listening to the first session there. I think what would be good is to have perhaps an interactive discussion when we get to the panel around how green technology can best be funded from an Irish perspective. So, just reminding ourselves, meeting the 2020 targets in Europe. We're talking essentially about huge investment across a range of technologies, with onshore wind being probably the dominant technology there, which from the point of view of Ireland and the announcement yesterday has to be very exciting. In terms of the single sector which is going to see the biggest proportionate growth, it should be offshore wind, but that's actually the smallest area of the four on that screen. In terms of investment required, we could debate the actual number all day, but it's in the order, I think, plus minus 70 billion euros per annum. Whether that's right, it could be 10 more, 10 less, but it's a big, big number. What's been happening to date is that it's primarily the utilities that have been driving the financing of assets based on balance sheet activity. And for utilities, it's all about maintaining their credit rating of at least single A. In the UK, that is imposing a maximum capital allocation for renewables from a big six of around £2 billion per annum, which actually doesn't translate into that many megawatts, particularly when a lot of that investment is in offshore wind. It's less than half the capital that's required. Utilities across Europe are all facing the same problem. And they're all facing the same problem, not just because of balance sheet capacity, but because they've got an awful lot of things to do with that balance sheet. Whether it's nuclear, whether it's thermal, whether it's different types of renewables, whether it's smart metering. So where else is the money coming from? Well, there's a variety of options out there. Bank finance, the multilateral agencies and state lenders, export credit agencies, and then working on through the more innovative forms of capital markets into private equity. And I'm going to look at a number of these as we go through. Deals are actually being done in the project finance market. It's not entirely true that post-credit crunch, project finance has dried up completely. And in fact, if you look at this timeline, which focuses on offshore wind, it's quite encouraging. More deals have been done using project finance over the last couple of years than might be expected. But they all have very specific characteristics that have made the specific deal work. And it's around the treatment of risk, and the risk appetite of the relevant investors and lenders, and also the participants that have come in to help the commercial banks get over the line. And perhaps most importantly, the role of the state in making these deals happen. At the moment, there's probably around 15 core lenders in the project finance market. And you can double that number if you look at the banks who are prepared to come in on at a syndicated level. Most deals are being done using very complex club structures, so lots of banks in every deal. Some banks having hold levels as low as 40 million. So if you're doing a £400 million deal, that's a lot of banks. And it would be fair, I think the easiest description to what's like working with a club is herding cats. It's really tough. Debt structures are now typically involving the multilateral agencies or the state lenders, such as the EIB. And if we went back to the diagram I just saw, you'd see EIB and KfW popping up again and again in terms of the banks, of the funders doing those deals. Multilaterals can fund up to about 50% of the debt requirement for a deal, so it's a very important participant. Just recently in the UK, we formed the Green Investment Bank, which is intended to have the same sort of catalytic effect that KfW has been having in the German market. And in fact, a string of deals have been done recently in the waste sector in the UK, where the GIB has been absolutely fundamental to helping commercial banks get over the line. It's filling a gap that has emerged in the current markets. But also, really importantly, the export credit agencies are back in the game. A few years ago, ECAs were just not playing in the European, or for that matter, more widely international markets. But now they're really important. And again, if we went back to that earlier figure, one of the bodies you would see popping up is EKF. Why is EKF important? It's a Danish export credit agency, and of course it's supporting Vestas, rolling out technology across Europe and more widely. And that might be an interesting lesson to think about in the context of Ireland, developing technology, developing export potential. Do you have the export credit capacity to be able to support your lenders and your developers in new markets? For Germany, they've got Euler Hermes, and we're also seeing the Japanese guys coming in with taking advantage of support from Nexi. Is the bank market going to get better? Probably not. Basel III regulations already is and increasingly will impact on cost, tenor, and availability of bank debt for long-term deals. So we're going to have to look at additional sources of funding.